Hi, thanks for joining me today to talk about the listed property sector. My name is Jonathan Kriska and I'm one of the portfolio managers for the Charter Hall Maxim Property Securities Fund, a fund which invests in Australian listed property securities, also known as AREITs. And today I'm joined by Pat Barrett, who is also a portfolio manager of the fund. But before we begin, I'd like to remind you that the content in this presentation should not be considered financial advice. And please consult your financial advisor before making an investment decision. So Pat, why would someone consider investing in the AREIT sector?
Well, AREITs offer investors the opportunity to invest in world-class commercial assets with world-class managers for just a few dollars. They offer income yields around about 4%, ranging up to 7%, but most importantly, they're liquid. So if your car breaks down, for instance, you can have your money back within 2 days. Investors in the sector can gain an exposure to larger assets that they wouldn't normally be able to get access to, such as a Westfield shopping centre or a CBD office tower. There's Amazon distribution facilities, seniors living, childcare, service stations. The list of asset options is extremely large. So in summary, it offers investors the chance to access assets that they wouldn't normally get, relatively high yield, and most importantly, liquidity for their investment.
And I guess the other thing being listed, there's plenty of regulation surrounding these vehicles, which is increasing the protection for investors. So how does someone gain access to the listed property sector?
Well, if you have the time and knowledge, you can invest directly in the sector yourself and choose stocks, or you can pick an expert in the field. And we think we're an expert in the field there. There's things called index funds, which are low fee options, which replicate the index. So that you get a share of every stock in the index, and whether they're good or bad, you get an equal share of those. Active managers, on the other hand, of which we actually choose the stocks to invest in the funds to maximise your returns. If we don't like a stock, we don't own it, and conversely, if we do like an investment option, we can increase our allocation to that stock. So active managers, our job is to beat the index. And so if you pay us a fee, our aim is to beat the index after the fee you paid us as well. Whereas index just replicate the returns and then you pay a fee on top of that. So you're actually returning less than the index return. So Maxim is an active manager.
And I guess that opens up that whole discussion around active versus passive management, which is always topical in financial markets. And I guess, we acknowledge that there are some managers out there who can't consistently beat the index, but there are plenty who can. And also, I think when you're looking at the listed property sector, it's very concentrated at the top in terms of stocks. So if you take an index approach, you're pretty much getting most of your exposure to 8 stocks. Whereas if you invest in a fund managed by someone like us, you get much greater diversity.
Well, a great example of that, being an active manager, is that coming into COVID, we were underweight the mall sector. So that's the big shopping centres with hundreds of specialty shops. We thought the impacts of e-commerce would impact retailers' returns and the rents they're paying. And this has been heightened by the e-commerce trends during COVID. So we were underweight that sector, whereas if you're on the index, even though you think there could be some structural issues with it, you have to own those stocks. As a result, we outperformed dramatically passive funds or index funds, and we allocated that money that we would have put in malls into other growth opportunities that did quite well during COVID, in particular the seniors living sector.
So tell us about the Maxim Fund and how is it different?
Well, the Maxim Property Securities Fund is a high conviction active fund, which means that if we don't like an asset, a manager or a sector, we don't invest in it. And conversely, if we do, we allocate meaningful capital towards that. We like to identify structural trends and best of breed managers and allocate our capital towards that. And I think it's borne out in the returns over the past 15 years. We've beaten the index consistently after fees and with less risk than a lot of our peers. And so we think it's a compelling investment opportunity.
Well, thank you for joining us today. I hope you've gained some useful insights into the listed Australian property sector and the Charter Hall Maxim Property Securities Fund. If you have any questions on the fund, please reach out to our team who will be happy to assist. Thanks, Pat, and see you next time.